getting a fundamental voice on the conversation as well. Parag Thakkar, Head Fund Management at Fort Capital with us on the show. Parag, good having you. Thanks for taking the time out. The last few days, last 2 or 3 days, when we've been trying to get in people to try and understand whether this is the time to sell or to buy. I would love to understand the market from you. What are you thinking? Because somehow it does seem that the texture of the market is such that it is not able to hold on to higher levels.
Sure. Yeah, so basically, short term, what will happen is anybody's guess. And as you said, every rally has been used to sell. But my view on fundamental economy is that economy-wise, we have bottomed out for sure. When do we bottom out from stock market perspective depends on many factors. From economic perspective, what we have seen in budget to boost consumption, which is 60% of our GDP, and then followed by RBI steps to infuse money to cut rates. There's a clear cut direction from government as well as RBI to step up on the growth pedal. And see, I'll tell you one thing. Last year, when we were making new highs and Nifty was touching 26,000 and all, that time it was very clearly evident on the ground that Q2 and Q3 were supposed to be bad because government's entire focus was on elections. And on the other hand, RBI was tightening to control inflation as well as some microprudential steps which they had taken, right? Now, all those things are getting released. Now, government's focus is back on economy. They want to push it through consumption and capex both. This time, after 10 years, they have started focusing on consumption because ultimately, when demand comes, private sector capex will automatically come. Second, RBI is doing extraordinarily correct steps by providing liquidity, and they have actually provided RBI put, which I always say, that if there is any shortfall in the liquidity, they will provide it. They have started with rate cut also. So I am saying that economy and this results, like what we saw last year, the results were not immediately evident, right? Results came in Q2 and Q3. And now we are punishing stocks for that. But actually market should be forward looking. And from here on till next year, we'll be talking a different language in terms of recovery in the economy and recovery in the domestic economy linked stocks. And don't forget, I always keep saying, from macro perspective, India stands out, whether it is current account deficit, fiscal deficit, crude oil, which is lower price. And of course, we all know the corporate balance sheets are completely under leveraged. Banking balance sheets are more stronger than ever before. So I would say that these 5 pillars of
members have mentioned about the objections to introduction of this bill. I'd like to say that actually Sri N.K. Premchandran's objection doesn't seem to be correct at all because, and that's also mentioned in my introductory remarks, the Income Tax Act was originally enacted in 1961, came into effect in 1962, sir. At that time, they had only 298 Act sections, and that is correctly referred. But then as the time went by, year after year, many more sections were added. And as it stands today, there are 819 sections. From that 819, we are bringing down to 536. So he should look at what it is today rather than what is in 1961. So on that objection, I don't think there is he is right. I don't think he's right. He should understand where the law is today and where it is being reduced. And second, sir, Manish Tiwari also meant, Manish Tiwari's argument was that sections are more now rather than when it was in 1961. That's a point. Then, that I've answered. Then 4,000 amendments have been made from 1961. And all those are being looked at now, being reduced now. So Manish Tiwari's core argument that it contains 536 clauses and has also more number of amendments now, I think he's not even looked into the papers, I'm sorry to say, so it cannot be sustained. N.K. Premchandran's statement about objects and reasons being different is also not correct, sir. The objects and reasons I can explain in detail when we take it up for discussion, but it cannot be sustained as an objection. Thirdly, Professor Saugata Roy's comment that again the philosophy and also the number of words and so on, he's looking at thinking that it is only a mere mechanical change. They are not mechanical change. Substantial changes are being made. Number of words have come down by half. Where there was 5.5 lakh words, now it's come down by half. Sections have come down. Chapters have come down. It's in plain simple English and plain simple Hindi, and therefore these are not sustainable.
आप मोशन लाएं, माननीय मंत्री जी, मोशन ले आएं।
पहले आप
Sir,
प्रश्न मैं पढ़ता हूं, फिर इसका मोशन लाना। प्रश्न ये है कि विधेयक को पूरा स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध।
All right, this is the other big discussion point, really. Parag, sorry we had to just cut there, but anyways, now just a question to you. Do you think the tax rate in this new income tax bill for FIIs being kept constant is a bit of a relief as well, or was that largely anticipated?
No, I think it was largely anticipated. So I would say that no changes in capital gain tax itself is a good relief in my view for every investor, because that was a big worry. Although everybody anticipated that there will be no change, and stock markets have also reacted very negatively due to various reasons we know. So I was of the view that it will not be changed. So just coming back to our original discussion, I think.
Parag bhai, sorry, I'll get back to the original discussion as well, but just wanted to get this whole income tax piece out of the way. So one, I've gotten an update from you that is not, no bad news is good news as well. Let's just try and understand if there are any other key details that have come out as well, and the importance of this. My colleague Shrimi joins in as well from Delhi on the phone line. Shrimi, the general feeling is that no bad news is good news here. Fill us in on is there any material change? At least whatever little I've seen thus far, doesn't seem to be any.
No, so I mean, no material changes as such, but there are a couple of hits and misses, of course, there in the bill. So I would start with the hits quickly. A couple of hits actually here that there are, of course, fewer pages, lesser section, subsection getting converted into main section, not many cross references of section, making it less cumbersome as in the past several decades, lot of sections being added in the existing Income Tax Act. So that is being done away with. Now many provision and sections have been curtailed. So that is a good point and a hit. Since it's being effective from FY27, is that what the proposal being made? So both individual and corporate would get time to align with the new changes. Of course, one important aspect here is that they're replacing assessment year with tax year. So again, this is a compliance thing where there are a lot of confusion around assessment year and previous year. That will be replaced with tax year. There are also some kind of strengthening you will see in terms of dispute resolution panels. So remember, a lot of focusing on, reducing the tax litigation, because we have seen 5 lakh crore around appeal pending, at CIT appeal level. So that kind of strengthening dispute resolution panel will help there. Lot of emphasis on the virtual digital assets and taxability of it, because earlier there were no kind of mention in the existing act about, cryptocurrency, etc. So now you will see a lot of those with the taxability and proper definition of virtual digital assets. Besides, there are also decriminalization provisions are there. They're replacing those with penalties. Lot of power being given to assessing officers. Now you will see a lot of audit being happening, as far as individual tax issues are concerned, corporate tax issues are concerned. So more power to assessing officers. Simplification of TDS and TCS you will see in the tabular format. So the approach being that it's more be formula-based approach rather than definition-based approach to deal with tax matters. Tax charter is another positive point, because there have been a pending demand to have a tax charter where taxpayers should know what are their rights. So that will be there. Clearer rules for non-resident Indians is equally important there. strong anti-avoidance we need to see, because there is some misreporting related compliance is being introduced. More deduction is getting proposed in terms of EV loans, etc. But when it comes to misses, so they're talking about lot of these sections getting merged into subsection, but no substantial changes as far as actual reduction in number of sections are concerned. Direct tax law being an evolving law, with time this will lead to a lot of making the act bulky again. There are also no change in the rates, which was a general perception around. So it's more of a review to remove redundant provision of the act rather than a new act.
Yeah, well summarized, Smriti. Srimi, thank you so much for putting that into perspective as well. That's Srimi Chaudhary, who's been following this right from the word go, and some details out there. Now, I think just the point that we wanted to the reason why we want to circle the square and just get this done and over with is because in some sense, yesterday, if you saw no changes in insurance, no changes in capital gains, and there was some market belief, quarters of the market which believe that that would have been a positive in some sense for the markets for those specific pockets as well. And I'm glad that is done. Maybe what we'll try and do is, if we can get in a quick word from Mr. Pranav Sehta, we'll try and get that going as well. But this being a non-event is actually good news, because you don't want this to have certain clauses or any kind of taxation matter related issues which might disrupt the sentiment around markets, particularly on the FI side, which has looked slightly wobbly in the last few days, weeks, months. So that aspect is very, very important. So Parag Thakkar is right. I mean, the idea should be to talk about what next, but just wanted to get this out of the way before we move any further. So I think I'm told Mr. Pranav Sehta has joined in, and just wanted to get that very quick perspective from him. Mr. Sehta, good having you. Thank you for joining in. Is this no bad news equal to good news kind of a scenario, you reckon, on the taxation front?
Absolutely. I think the simplification is a good attempt, almost half the number of words in the current law. Stability is good. We don't want unnecessary disruption. So I think it's more or less similar, no substantive changes. And therefore, I think it is good news. It shows stability, predictability, continuity, and simplicity. They have tried definitely by removing redundancies and so on. So I think it's on the whole a good step.
Right. Mr. Sehta, Srimi was talking about a few additions, like a few hits in terms of, adding regulations with regard to cryptocurrency and stuff. And she also mentioned that there'll be more power given to assessment officers. But what we've seen so far is that, the Income Tax Department wants to, digitalize everything. So what's the reading with respect to both of these aspects?
At least, I mean, we can look at the fine print. I don't think there's any significant change that we saw when it came to the assessment proceedings, etc. At least not something that was jumping up as adverse to the taxpayer. By and large, I think they have tried to streamline the provisions, simplify the law, and make it without explanations, provisos, and so on, remove redundancies. I don't think there's anything significantly adverse even on the assessment front.
Okay, and with respect to, your view, whether you were expecting something more from this new income tax bill, or is it as per your expectations then?
Sorry, I was on mute. Yes, I would feel it's by and large as per expectations. There was never a feel that they would make any substantive changes to the law. It was more an attempt to simplify and remove redundancies. One could have probably seen a little more in terms of trying to ensure better dispute resolution and reducing litigation. But I don't think there's anything adverse in that sense. Could always have been more for reducing the litigation and bringing in more dispute resolution potential possibility.
Mr. Sehta, they've changed assessment year to tax year now. If you've, got the chance to, read through that, can you simplify that for us and explain as to what the change is exactly?
Sure. So currently we have this traditional concept where previous year, the definition of previous year is such that that really is the financial year for which one files his return, assessments happen, and so on and so forth. And the assessment year concept is the year immediately following the relevant financial year to which the income and the taxes relate. Now, this creates an unnecessary confusion, and I think they have done a good thing by doing away with the concept of previous year and assessment year and coming up with one concept of tax year, which is really the financial year to which the income relates, for which the taxes are being computed and paid, rather than have these two concepts. I think that's really a good step in terms of simplifying the conceptual framework of the year to which the tax relates.
Right, Mr. Saita, thank you so much for breaking that down for us, and thank you so much for taking out time and speaking with us at NDTV Profit. Parag, I'll come to you. Although the market sentiments are kind of not very good right now as we speak. The market did see an uptick in the mid-trade day sort of things, but overall consumption space is doing pretty well. What are your views with respect to all of these counters, especially QSRs, because they have picked up, of course, on a lower base, but what's your view with respect to QSRs right now?
So I'm not tracking QSR space very closely, but I am very bullish on consumption space from here on, simply because government has understood the need of boosting consumption from this budget, and they have taken various steps which will boost consumption gradually, of course. So in coming quarters, and of course, what I'm hearing on the ground is that rural consumption is coming back. So the only problem which remains is urban consumption. Now, the hope is that with this tax break of you don't have to pay tax up to 12 lakh rupee salary, that will also boost consumption on the urban side. And that will come after 2 to 3 quarters, actually. So within the consumption theme, I would be more bullish on companies like TVS Motors, which are there in my portfolio, with a disclaimer that it is not for trading and it is a personal view. Because I think if 1 lakh rupee is saved, by a person who is a salaried person, gives him freedom to buy a two-wheeler, which he was not up till now buying. Plus, company specific, they are doing excellent in terms of product launches in every segment. January volumes were 3,95,000, which was very good. February channel check suggests that they are doing good volumes. They are launching excellent products at every price points. Their Africa exports have rebounded. And market cap, I would say the cash profit yield at current prices at around 4%. With the extraordinary top-class corporate governance, I think the product cycle is in your favor. Africa exports have rebounded. And the other thing, one important thing specific to this company is that unlike peers, they have not actually passed on, I would say, they have not, their PL has not reflected the PLI benefit, which has accrued to the peers. So in Q4, you will see, and that is what they have said on the call, that in Q4, they'll recognize a PLI profit also, which is around 1.25% margin addition. So they already reported good margins of 11.9% in Q3, which with operating leverage of selling higher vehicles will only go up. And then this PLI benefit will come. So I think companies like this should do well. Apart from that, of course, the FMCG pack like Hindustan Lever, Pidilite, Britannia, all these companies, I think I'm strongly recommending to investors you should buy you should start buying in gradual, I would say, piecemeal basis or SIP kind of thing in consumption-related stocks from here on. First of all, I would like to say that these are the stocks where you don't have to worry about corporate governance, balance sheet, ROC. They are all best. The only missing link was growth. And hopefully the budget and the RBI policy and government's focus to drive consumption, which in a way will trigger private sector capex, is giving me a lot of confidence on this thing. Plus, the stocks have not done well from last 3-4 years, which is another comforting factor for me. But these are not for trading. These are not for faint-hearted. These are buy on every dip, slowly, gradually accumulate from long-term perspective.
Okay. Parag bhai, lovely talking to you as always. Thanks much for being with us. The conversation got a bit curtailed today because of the bill, but appreciate your time.